Good evening. My name is Kelly James Frank. I'm the author of To the Moon Investing, visually mapping your winning stock market portfolio. And I'm pleased to be here tonight at the Jasper Municipal Library doing a presentation on my book, and I'd especially like to give a shout out to Holly Llewellyn, who set this all up for me. Just a couple safe harbor comments right out of the gates. First is that I'm not recommending any particular stocks. I'm not here to sell a subscription service. I'm not here to tell you what you should buy when. I am here to describe my book and a framework for how to make better stock purchasing decisions. Effectively, what I want to do for you is eliminate all unforced errors in your stock selection process. Now, I've been purchasing stocks for many years myself. I'm a graduate of the University of Alberta. I own a stock selection company, my own asset management company called 13.8 Investments, which I use within the framework that I've developed here in the book to make high growth stock investments. Now, imagine if you step back a few years and you looked at the way the market was and the way the society was in terms of malls, and now we have people going to Amazon. We have people buying cars from car lots 10 years ago, and now they go to Carvana. What I want to do is give an opportunity for people to do proactive investing through using visual maps that guide them through their decision process. In effect, what we're going to do is take a look at companies. We're going to link their business model, the way that they do things, and how you can incorporate that into your decisions on purchasing stocks. The big idea, though, is that we're going to approach this instead of just looking at the data of stocks and companies. We're going to take an inside-out approach, and we're going to treat the individual investor in the Simon Sinek model exactly as to what he looks at in terms of businesses themselves. And we're going to begin with why. Why does a person want to invest? Then we're going to talk about how to invest and what to invest in terms of your personal approach. And by what we mean is, what is your aspiration in purchasing stocks? We all have something that we aspire to, and it's not just about making money, but it's to use the money to further an end goal that you have. If you take Lululemon, for example, and you don't say, why does Lululemon exist? They don't say to sell yoga pants. They say, we want to develop a community hub for people who believe in the types of things that we believe in. How they do it is through having great stores, a terrific online platform, and what they do at the end of the day is sell yoga pants. But you start with the why, and that is similarly here with our book approach. Now, we want to use a visual approach, and that reason for that is that visual images can be processed up to 60,000 times faster than text messages in your brain. We're going to step through the visual approach by the creation of investment maps, and we'll get into that in a second. But the idea here is that to make stock selection, instead of going through reams of data, you integrate that data into your own approach. And primarily, we're going to use what we call the 5-stack discovery, which begins with a macro view of the market. Is it a bull market? Is it a bear market? Then we step down into looking at the index. There are 11 stock market indexes that every company is placed into. So you have the energy vertical, you have the consumer discretionary vertical, you have the real estate vertical. All of this roughly 6,000 American stocks, the 2,500 Canadian stocks are placed in one of those 11 verticals. Then we get into our valuation techniques, and those valuation techniques are using fundamental analysis, and in particular we're going to look at things like a price earnings ratio, price to sales ratio, operating margin, enterprise value to free cash flow, and debt to EBITDA ratios. And then we narrow down, we go into technical, some very simple metrics, your 50-day DMA to your 200-day DMA, and the outstanding shares that a company's issued, and how that rolls into the float. Okay, so I'm using a lot of technical jargon here, but it's all explained in the book, and I'm going to continue on here and make it easy for you to understand. So there's 4 series of maps in the book: Mercury, Gemini, Apollo, and Skylab. And what we do with each map when we start with the macro is we're saying, what's happening out there? What is the marketplace telling us? Is it a bull? Are we in a bull market? Are we in a bear market? Now, a bull market means that on average, the pricing for the stocks, whether it's in NYSE, NASDAQ, or TMX, has risen some 20%. Or in a bear market, those stock prices, the average prices have fallen some 20%. And what we do is we take a look at the things that drive the market in general. We look at front page news, and what we mean is that are people out there generally positive about the world that they live in right now? And you can measure that. And that's by just saying, are 50% of the people out there happy with President Biden or Prime Minister Trudeau, or is it less than 50%? It's just your gut feel for how they view the world as unfolding in front of them. And then we proceed through inflation, unemployment, GDP, the Treasury basis point difference between the 2-year and 10-year bonds, the price of oil, and the Chinese Purchase Managers Index. Now, what I did is I evaluated over the period 2012 to 2021 all of the data that was put out for those key categories by the St. Louis Federal Reserve, one of the districts of the U.S. Federal Reserve, and they have an incredible and rich database. And in that 10 years of data, from 2012 to 2021, the U.S. GDP went up by 50%, Canada's GDP went up by 20%. So that was essentially a bull market scenario. And then for each of these key data points that I just described of inflation, unemployment, GDP, treasuries, oil, and PMI, I took a look at what was those rates or pricing during that 10-year period. And I'm saying going forward, if oil was on average, say, between $55 and $80 a barrel during that bull run, then going forward, that's what we want the market to be in or to be supported by. If unemployment was, say, on average during that 10-year period was 3.5%, then that would be our target for saying that we're again into a bull market. Just spinning through to a couple key slides. Now, once you have your macro information, then you look at the index that your stock is in. And we look at the GDP, whether we're in a growing business cycle or a falling business cycle. So GDP is expressed quarterly by both the U.S. and Canadian governments. And the last quarter was 2.6%, an advanced estimate for the USA, and I believe it was about 0.9% for Canada in Q3 of 2022. So you put back-to-back GDP levels, and if they're both positive, then we're in a growing market, and that is good for all stocks. When we funnel down and we go to the valuation of stocks, we cross-check our 5 key indicators to that stock that you're picking. So let's say, for example, you're picking Walmart, WMT, and you see that the price-earnings ratio, which is on average is around 18 for all the stocks in North America. If Walmart is at 15 or 16, probably might be undervalued, but you certainly don't want to be over 25 for any stock. If a stock is over 25, then you have to have other reasons for proceeding. And then you look at the price to sales ratio. Is the price to sales ratio, is it over 5? That means that the price of that stock is probably, getting ahead of itself a little bit in terms of the sales that the company's generating. So you might want to ratchet back from there in terms of your analysis, or just find other reasons to buy. We step through the operating margins. You want operating margins that are 15% or higher. You want debt to EBITDA that is 2.5 or lower, and enterprise value to free cash flow. Probably if you're getting over 40, it is rich. Now this is a whole lot of data, but the thing is with the book, it comes with the maps that you can download, and you literally just go on Yahoo Finance, populate the maps. That's essentially my presentation. It's just a quick overview of the book. We hopefully did this in under 10 minutes, which is our goal. There was a lot of information presented. Again, I really want to thank the Jasper Municipal Library for making the time and the projection available, and I look forward to feedback from people and answering questions that they have on this presentation. Thank you.